Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to talk about one company that I could potentially be adding to my portfolio. And before I tell you this company, I just want to show you something first of all, and that is just how diversified my portfolio is. There are 11 different sectors in the S&P 500. I don't have any utilities, I don't have any communication. I've just added one real estate in the last video if you want to watch it, or the video before, I can't remember. And then we've got healthcare, we've got consumer discretionary, energy, and so on. And as you can see here, my top company, my top sectors if you like, is technology. And the reason that has happened is because, especially, and these two actually financials, is because financials includes first of all Visa and MasterCard, both technology companies in my opinion. Then you've got the tech companies. So tech is where basically what I know. That's my base, like my degree is basically is computer science. For that reason, I know a lot more about technology companies, feel a lot more comfortable, use it daily basis, and so on. Financials, because there's MasterCard and Visa in there, it has grown a lot. Industrials is the other sectors that I actually really like, because a lot of their products is tangible assets that you can see and use, and you see it used around the world and so on. Materials, consumer staples are another easy one. Energy, yes, not so much. Again, of course, stuff that we use and basically whatever, but not experts in that sort of a thing. Healthcare used to be one of my top sectors. At some point, if I remember correctly, it was either the first or the second, basically, when it comes to my top hold, basically, sectors. Now, it has fallen basically below, because quite significantly down a lot. A lot of that is because I've sold J&J, so Johnson & Johnson, because of the legal situation. And I've also sold Medtronic. And for that one, it was growth side of it. The dividend was okay-ish, and the growth was not there at all for the whatever years. Now, I can have companies that have basically grown the dividend really nicely, and maybe having a bit of a turnaround. That one, I didn't feel like that's what was happening. Now, I could be wrong, and because it is a great company, their products are everywhere if you think about it, basically medical devices and so on. But I just feel like those two companies did not represent well my basically overall portfolio. If J&J's legal situation changes tomorrow, I promise you I'll be adding back that company, because it's still undervalued at the same time, because the growth was kind of there, the dividend was really good, and it was one of those, basically credit rating wise, I think it had AAA, which is basically better than the United States credit rating, right? So what I'm going to try in the next few weeks is try to find basically really good companies in the healthcare sector, because healthcare has not done really well overall. So I want to see if I can find some really good stocks in there that I could potentially add to the portfolio. I'm not saying I'm going to add that right now, but I will be, inshallah, looking into it. Now, what am I going to do? I'm going to look into one of the companies. I'm going to look into is the one that we're going to talk about today. There are a couple of other companies, some based in the UK, that I will be doing more research on, and I will share that with you guys. But before I do all of that, I will genuinely appreciate if you can join us at the Patreon account, where you get access to a lot of things, including the family portfolio and other things, as well as including the Discord, where you meet a lot of really good brothers and sisters who are sharing good practices on every single day. Now, the company we're going to talk about is Novo Nordisk. This is Novo Nordisk, is basically one of the companies that are European based. Basically, it's a Danish company. It's been around for quite some time. One of their products, so basically the segment for their products include diabetes care, obesity care, rare diseases, chronic basically products, and so on. So within the diabetes, they've got the insulin production. They've got the GLP-1. You probably heard recently a lot about that, because of the weight losses, because it includes the Ozempic side of things. Ozempic is one of the products now that help this company, or even Eli Lilly, go to the moon, whatever. Especially Eli Lilly has gone up so much, because they came up with but one of their products was actually quite successful in terms of weight loss. They've also have diabetes management solutions, so they offer devices and tools to help people manage diabetes more effectively. They've got obesity care, basically that for weight management, so people that are obese, so basically they can help themselves. And then you've got the rare diseases that basically they also have, and at the same time the chronic conditions and so on. Now, in terms of their market share, basically the company's been around over 85 years, and basically when it comes to their market share in terms of diabetes treatment market, we're looking at about 34% of the 50 billion plus diabetes treatment market, which is absolutely amazing, and half of the more than basically 15 billion in insulin market. So the insulin market is about basically 15 billion. They own half of that, 34% when it comes to the overall 50 billion plus diabetes treatment market and so on. And one of the things I really like about this company is the fact that it's not good, like it shouldn't like about this, but it's the fact that when it comes to the insulin need will start basically still growing because more patients are diagnosed with treatment for diabetes and so on. And I think this company is probably one of the best when it comes to that side of things. So overall, is a very good business. But what we then they have products that is basically is needed right now, and I don't know where you live, but depending on what country you live in, there are more people getting obese. There are more people basically that need the diabetes product and so on. And inshallah, may Allah help them. But at the same time, these companies make money through that, and they come up with the drugs that they're helping everyone out there who's suffering those diseases. May Allah protect us all of us, inshallah. So what we're going to do now is look at the financials. So we have an idea of what the company does. Now we need to know how they actually make money, basically how much they make in terms of their product and so on. So the first thing we're going to do is the financials. That's always what we're looking for. The first thing we're looking at is the revenue side of things. And total revenue from 2014 was $14.4 billion. And right now we're looking at about $40.4 billion, over $40 billion, which is absolutely ridiculous, right? Now, out of that 40, the cost of that revenue is about $6 billion. So they gross profit of $34 billion, which is absolutely amazing. Just think about this. There's not that many companies out there that is generating this type of gross profits. Then, of course, the company spends a lot of money on research and development, so $5.6 billion, because, of course, these drugs are not going to pay for themselves. Like, you have to go through all the trial and all of that stuff. Especially the company recently actually went down about 7% or whatever it was. In fact, let's just quickly go back because I want to see how much it is down. So 21% for the 1 year. Last 6 months is what I'm interested. 40%, which is absolutely crazy. It's hitting that 52-week low, which is crazy if you think about it, for a company who's basically that's been going up quite a lot. And a lot of that is because of the trial for basically for one of their drugs got to a stage 3 or 4, I can't remember which. I think it was stage 3, and the analysts didn't like the fact that basically what they've heard, and for that reason the stock went down on a 7%, 12% or whatever it was. But yeah, let's have a look at the financials, because these things will happen and it will change maybe for 1 or 2 days. But what's not going to change is the long-term trajectory of the business, and that's what we want to see. Where has it been and where is it heading? 34. So they've got research and development, they've got selling and the general administration expenses and all of that stuff. And then what we want to see after they paid all the taxes and so on, net income over $14 billion, which is really good, healthy if you think about it. Basic EPS, we're looking about basically less than $1 to right now $3.17 again, which is really nice. Now, if we look at the balance sheet, okay, one of the things that we normally look for is current liabilities against current assets. So the total current assets we're looking at basically $29 billion against the current liabilities, which is about $31 billion. Now, that is basically, so now the current ratio for this business will be less than 1, which means they might not have enough liquid asset to actually liquidate in the next 12 months. But when you look at the total basically assets, which is about $59 billion against total liabilities, which is 41, they've got enough to cover that. So current might not be great, but the rest seems absolutely fine. Now, if we look at the cash flow here, and scroll down to this part here where it talks about the leverage cash here. We've got about $7.4 billion of free cash flow. Again, depending on what website you look at, sometimes these things slightly change, but overall that's where we are right now. Now let's look at the rest of the financials for this business, and the first thing we're going to do is basically look at the market cap. 287 billion market cap. It has a wide economic growth. Beta is very low, and this is one of the reasons why I like the basically healthcare companies. When the stock market doesn't do well, basically very volatile, these are the companies that move about 1% or 2%, whereas the rest of the Nvidias and whatever are moving 7-8% every single day. But these companies will only move about 3-4% basically over a period of time. Now, in terms of EPS, it seems a little bit current PE, we're looking at about 28, forward PE of 27, and basically last 5 years has been about 35. So it's cheaper than where it has been, but the sector is slightly higher than the sector. Now, dividend yield of 1.7, payout ratio of 48%. Annually, you get $1.44, and the last 5 years they grew that dividend 18%. I don't think this company is part of the S&P 500, so it's 27 years of increasing that dividend. Otherwise, they would have been a dividend aristocrat. The dividend safety, 99% of free cash flow of $9.2 billion. Like I said, $7 billion, $9 billion is closer to around that. Okay, free cash flow right now we're looking at about 12% in the last 5 years, the compound annual growth rate, and free cash flow or margin of 25% and 10% in terms of what we're normally looking for. Profit margin, we've already seen the profit margin 35%, which is absolutely amazing. Return on operating margins of 43%, return on equity 88%, return on invested capital 67%. And when we look at the net income margin for compound annual growth rate for the last 5 years, we're looking at about 34%. Total return the last 10 years, we're looking at about 16%. Revenue in terms of compound annual growth rate for the last 5 years, we're looking at 17%. EPS 21%. And like we said, it is slightly lower in basically than one, because we've seen they have more current liability than current assets, which is fine. It's not far off, and they do have some free cash flow that they can actually use if they need to. Now, EPS growth, we're expecting about 24% next year, which is really good. And this is one of the reasons I'm actually seriously looking at this company right now. And revenue growth for next year, we're looking at about 22%. Current ratio, we're looking at about 83%. And now, current price, we look basically right now, $83 per share. Now, in terms of valuations, we're looking at about $86 per share from Morningstar. It's fairly valued. 154 when it comes to Simply Wall Street, which is basically quite high in my opinion. 154 dollars per share from 83. Yeah, it's okay. 43% right now according to them, undervalued. Timberrank is $112 per share, 33% upside from where we are. Morningstar more or less the same, 114, 36% upside. As a buy, this is a moderate buy. And in my opinion, I think this is a buy for me generally, because it seems a really good company overall. But what we're going to do is put it into discounted cash flow model and then give you kind of sort of average. In terms of business side of things, I like the fact that they have a very low interest bearing debt, very low interest bearing securities, which is really good. And they are buying back their own shares. So you get the dividends, you get the buybacks. Sharia compliance side of it, nothing to worry about. It seems undervalued at the moment, and it is in the right market. Like I said, diabetes care, obesity care, the rare diseases, and all of that stuff. Ozempic is probably one of the after AI. If you type that, basically right now the next big thing is Ozempic product, which is basically a lot of people are using for weight loss and so on. So overall, it seems basically it's in the right place. Now, what we're going to do now is look at the financials with the valuation side of it. $86, we've seen that. 153, $114 per share. Dividend is basically discounted model that I used to gave me $99. Multiple more valuations 100, and discounted cash flow model 87. Average all of the 6 out, you get $106 per share. Current stock price at 83. That gives us about 20%, 28% upside from where we are now, or difference. And if you say I need maybe this is a very volatile stock, or whatever the case might be, a bit risky to not meeting the target for the next stage of the drugs that they've got, then you might want to give yourself about 15-20%, and that will basically be still a buy about under 90 basically dollars per share. Now, I'm definitely considering this. I will let you know, inshallah, what I decide moving forward. One final thing I want to do before we move on is to look at in comparison to the S&P 500, what the company has done over the last whatever years. So we're looking at the total return for the last 5 years in comparison to the S&P 500. Just to zoom in a little bit, you can see 192 basically percent against the 80% in terms of S&P 500. And if we look at for the 10 years, you can see 362 and 184%. So it's done really, really well. Now let's add a couple of companies that are in a similar sort of a sector. And the other company I'm going to add is LLY, which is basically Eli Lilly. And I want to see basically side by side. So 10 years we're looking at 364 we've seen, the S&P 500 we've seen. J&J's only done 86%. Merck is 127, which is decent. 127 for AstraZeneca, and Eli Lilly 1,172. I think a lot of that came from maybe just this year, because this company is done. Let's just go for 1 year and see what happens. No, 18% only. Wow. Okay. And the rest of them are actually negative. And the last 3 years, let's have a look. 200, and yeah, is outperformed all of them. And the last 5 years, if we look at, we're looking at 467. So it's done really well, this company Eli Lilly. But this has also done amazing job over the last basically 5 to 10 years. So growth is there. Like I said to you guys, also just to quickly show you, the growth side of it is that we're looking at double digits in terms of year-over-year growth for the EPS, and in terms of revenue side of it, it's almost the same. Now, in terms of the what I've shown you earlier, as you can see here, there's a lot of bullish basically people, but at the same time, some of them are saying, yep, sell it right now. So you've got 4 strong buys, 2 buys, 2 holds, 1 sell, and 1 strong buy, and that gives about rating of a buy right now. So just moving forward, I'm going to keep an eye on this company, inshallah, in the next few weeks. And if I see a bull pack, and if it's bullish back, or maybe after the revenue, because there's a lot of companies reporting their earnings in the next few weeks. I don't know exactly when it's reporting, but I will find out. In fact, I can just very quickly check that. So the next basically okay, so February 5th of February the 5th is when it's reporting. So we will see what happens. Okay, and if it basically pulls back a little bit, last time it actually missed, so we'll be interested in terms of revenue side of it. EPS is basically beat, so I want to see, maybe I will wait until then and potentially add to the portfolio, or start buying a little bit here and there. I will share that with you guys, inshallah, when I have more information. I hope you're enjoying this type of content. Like I've always said to you guys, it takes a lot of time and effort to put these videos together, as well as editing, publishing, and all of that stuff. And then of course the websites that I use is subscription based, a lot of them. So I would genuinely appreciate if you can just help us by joining the Patreon account, where you get access to a lot of things, including the Discord, inshallah. Like the video, subscribe, let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.